Are you scared to pull your credit?
Woo!
Don't be, because we at Van Dyke can help you solve some problems. I just want to go into a little bit about derogatory credit. We're going to go over a few little topics and we revert back to this chart, and we can send you a copy of this chart if you'd like. Just let us know, email us. But first off is bankruptcies. There's 3 types of bankruptcies. I'm going to go over chapter 7 and chapter 11, and that's basically where you're walking away from your liabilities. There's FHA, VA, and conventional loans. FHA will require 2 years after your discharge date before we can do a new mortgage for you. VA is 2 years also, and conventional requires 4 years. And this is from the date of your discharge date that you get from your bankruptcy attorney. And there are cases for extenuating circumstance. FHA and VA will allow you to go a year after your discharge date if there's extenuating circumstances. And we're talking very extenuating, like, death in the family, serious illness. It has to be something that can be documented and go through underwriting. So typically 2 years FHA, 2 years VA after the discharge, and 4 years conventional.
And the other form of bankruptcy is Chapter 13, and that's where you actually restructure all your debts. You go back into a repayment plan. You set this up with the bankruptcy administrator. And in those cases, you can get a mortgage as soon as a year after, as long as you've made all your payments on time for FHA and VA, and conventional still requires a 2 year. But it happens a little bit faster than if you do a 7 or an 11.
So foreclosures are another derogatory credit we see a lot. And FHA requires 2 years lapse time from the date of the certificate if the title is filed. So you may have foreclosed on the property in 2020 and it didn't really go back for sale and the title wasn't changed till 2021. That's the date we go off of, not the date that you actually did no longer own the home. It's when someone else has it. So many prospective borrowers get the date confused and they think it's when they quit their payment instead of the actual sale date of when the property was, the certificate of title changed hands. VA requires 2 years and extenuating circumstances, just like with foreclosures if you've had a death in the family. Conventional requires 7 years, but may allow 3 years with 20% down and extreme extenuating circumstances. That's hard to say 3 times real fast, but that's it on foreclosures.
And I think that's really important, that people should not take anyone's word or take anyone's memory, but the first thing anyone should do is go look at the property, look when the title was transferred over. Because that gets a lot of people. They'll think, well, I foreclosed because I stopped the payments, and a year goes by and they've thought for the last year or two they're going to buy a house and they can't. So
I had one where the bank didn't take it out of their name for 5 years.
5 years.
5 years. And when we went to go do the loan, the ticker had to start.
Yeah,
And they made some
so
changes to the
disappointing.
guidelines there. But they thought 5 years is gone. I'm good. I'm clean. I'm ready to go. The bank never took it out of their name. So
Ugh.
Just
Shame.
like bankruptcy, like you were talking about earlier, you really need to check the discharge date, not just make an assumption, well, I went to court on this day, when were all the papers finalized, when was it recorded? So I think that's something that, like, one of our biggest points of this podcast is to check your timelines.
Yep,
And don't
absolutely.
assume, because
Check
everything
it
has
out.
to be in writing, so.
Yeah, one of the other things that you want to check is too, if your bankruptcy and your foreclosure are in the same transaction, the foreclosure trumps the bankruptcy.
yes.
So
So you got the foreclosure timeline.
Yeah.
the
Good point.
timeline of the foreclosure comes in play before the bankruptcy.
And there's another thing, it's called deed in lieu of foreclosure. So that basically is where a borrower, is what we like to call them, a property owner knows, I can no longer make these payments. I'm going to give the deed, I'm going to sign the deed back over to the bank, and I'm done, instead of letting it drag out for years and years and years. And I've known people that have done this. That is another one where you have to check to see when the deed was transferred over. You might sign it and send it to your bank saying, I'm done, I can't make the payments, it's gonna go to foreclosure, but you have to check that. So, the timelines for the deed in lieu of foreclosures, it's 3 years for FHA, 2 years for VA, And then conventional, it treats it like a foreclosure. A deed in lieu is still a foreclosure, and that's going to be 7 years.
Yep.
And sometimes there can be extenuating circumstances as well. But again, we talked about a death in the family. It can't be your Uncle George that passed away.
Right.
It has to be your spouse. It has to be a parent that contributed toward the household income to make the mortgage payments. And there's no guarantee because it's an individual basis.
Right.
And short sale, we're not seeing a lot of right now. People have equity in their homes.
Yes.
A lot of equity.
But
in
we
their
did see
homes.
them for a while.
Yes, for a while it was a really big deal. So a short sale is where you're asking the bank to take less than the balance owed. And you have to do a lot of paperwork. It's a long, drawn out process with no guarantees. I've heard short sales that have taken over a year. So a short sale is also treated like a foreclosure where you're looking at 3 years FHA, 2 years VA, and 4 years for conventional. We're not going to go too much into short sales because we don't see a lot of them. There are some.
Yeah.
A lot of people are out there saying there's no short sales whatsoever. No, there are, because some of the ding dongs that paid $100,000 over fair market value or list price of their property, they could be in a short sale position
Absolutely.
And then
next
next
year.
year, yeah.
Right.
year. So short sales are not gone away. But I think a lot of people right now, they're waiting to get the foreclosures. They're waiting to get
Right.
the short sales, and they want to scoop up and buy those properties. But it's not going to
I
happen with
agree.
their equity.
Too much equity these
Yep.
days.
Because then they can go list their sales. So they can't make their mortgage payment. They know they're done. Well, they list their property and sell it, and they get the equity.
Right.
So I have a lot of people call me all the time. Where can I get the list of foreclosures? Well, there really isn't.
Right.
And there probably isn't going to be a lot. So.
I agree, but I think, the most important thing to walk away from this episode, people just think when they've had bad things happen, that they're just never going to be able to buy a house again. And we've proven here today in this episode that it can be as soon as a year after some
Correct.
of these events. Because listen, life is not easy, and S happens.
A lot of people
Right.
go through this, and call us because
Right.
we can get things done a lot quicker than most people think that we can get it done after the derogatory event. So
Yeah, we
There's
have
a light-
outside sources that we can do one day after bankruptcy.
So there's light at the end of the tunnel.
exactly.
Just pick up a phone and give us a call. It may not be as bad as you think.
Please follow us at Mortgage Chicks with Hot Tips on Facebook.
Don't forget to listen to us wherever you listen to your favorite podcasts.
If you have any topics of interest or questions, please email us at mortgagechicks@vandykemortgage.com.
And you can also watch us on our YouTube channel at Mortgage Chicks with Hot Tips. And I hope y'all have a happy Halloween.
Happy
Happy Halloween!